You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Mark Longo here from the Options Insider, and I'm breaking into your regularly scheduled program to let you know about a group and an event that I think may interest a lot of you. I know a lot of our readers and our listeners out there are interested in using and applying their options and risk management expertise in a lot of interesting new areas. And maybe you want to become a fund manager or an asset manager. Maybe you want to create a financial technology startup or become an educator. There's a lot of interesting ways you can apply that expertise. And if that sounds like you, well, then I have a group you may be interested in joining. It's called the Options Alliance. We're a group of active financial entrepreneurs and startups. We have a conference every year that explores all of the issues that are important to new startups and new endeavors in this space, including how to market your new venture, how to grow your AUM. Of course, it's a very important metric if you are an asset manager, and perhaps most importantly, how to fund all of those great new endeavors. It's a really unique event. There's nothing else like it out there. So if that sounds like something that might interest you, then clear your calendar for Monday, December 8th, and join us at the Arditi Center for Risk Management right here in Chicago. You can review the full agenda and reserve your seat at www.optionsalliance.org. And now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block. Everyone's favorite, at least it's my favorite. I'm sure everyone here on the panel's favorite as well. It's probably a few of you out there as well, favorite bi-weekly options program. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. No shortage of ways for you guys to find the nearly 400 hours of programming we put just for the Option Block alone on this fine program. You can find all those shows, of course, at theoptionsinsider.com, as well as all of our breaking news from the options market, education, analysis, all that fun stuff, as well as all the other dozen programs we have on the network now. So probably haven't added it up, but probably well over 1,000 hours, quite easily, of content for you guys to peruse over there. Of course, you can also find it iTunes, Stitcher, Aha Mobile, wherever you find your favorite audio online programming, including via our mobile app available for iOS, Android, even the Fire OS. No shortage of ways for you guys to listen to our stuff and interact with it. We love that latter part, your questions, your comments, your insights. Keep sharing them with us. We love to hear from you guys. And speaking of hearing from people, the first person on our all-star panel we shall hear from today is the Viceroy himself, none other than Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Good to be here, Mark. The theme here at OX continues to be energy, but today we saw that manifest itself in a couple different ways. We saw some activity in the airlines. United was active on the desk today, and FedEx late in the day. I think those were both energy plays. So energy continues to dominate, though, in the terms of what's keeping the desk busy here.
And listeners, whenever there's frenzied typing on the call in the background, you know we are joined by the man himself, the greasy meatball himself, none other than Mr. Mark Sebastian from OptionPit.com, busy frenetically typing as he's listening to the show. Mr. Meatball, welcome back to the program, sir. And who, pray tell, are you typing to?
I'm at somebody that I'm typing back and forth with a colleague at the street.com named Stephanie Link that is who's a extremely smart woman. Are
you telling Kramer he should sell his stake or go back to work full time for the street?
She is. She's explained to me, all these great stock picks that I like, and we're discussing how one might trade options in them. But no, things are great. We finally where it's a balmy 32 degrees downtown, so I'm feeling good about that. And here we are, market down 2.5, and the S&P and VIX down anyway. So there you have it.
That sounds like the right story, at least for what we've been seeing of late out there in the old marketplace. And last, but certainly not least, rounding out the Chicago equation by way of the hinterlands known as scenic and lovely St. Charles, Mr. Uncle Mike Tusaw from RCM Wealth Advisors, RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Greetings from the hinterlands. Always good to be here from way atop the high of the mountain.
Yes, many, many mighty mountains. People think of the Midwest as very flat, and they're right, except for St. Charles. Very mountainous. People don't know that.
That is true. Actually, it's very false. It's a bald-faced lie, but anyway.
I think there's one slight elevation, about 5 feet or so that counts as the molehill of the area. But we won't tell anyone.
And that's being generous.
That'll be our secret. All right, and with the team mostly assembled, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the program where we break down, run down what caught our eye in today's activity. And Mr. Seabass kind of let the cat out of the bag. Wasn't a heck of a lot of cat to really let out. Not a lot going on overall. The S&P, like you said, down fractionally on the day. The Dow down fractionally as well. The Q's down even a smaller fraction than that, so not a heck of a lot going on from the major index perspective. Anyway, VIX Cash actually catching a bit of a lift up about a tenth, a little more than a tenth of a point or so today to 12.61, right in the 12.5 or so range. And as Alex alluded to, really, it seems like the lion's share of the interest, the activity, the eyeballs today were certainly not on the equity side of the fence. They were on the commodity side of the fence, where oil just continues to mystify and stymie all projections. The Saudis once again cutting their targets, pretty much showing that they're committed to maintaining market share in spite of all other considerations. And there was a lot of thought recently that they were going to dive in and really support it at 60. Brent below, not 60, at 70. Brent below 70 again today at 69 and change, and the other benchmarks falling as well. So clearly, not a lot of support out there for the crude fans, the crude bulls out there. Perhaps we'll start with you, Mr. Viceroy, since you brought up the energy. Give us your rundown, what you saw today, as well as what was kicking. You said it was a little bit of a different energy story than you might expect over there. So I'm kind of curious. Give us a little bit of insight into that as well.
Yeah, our customer base seemed to be buying the airlines, seemed to be buying the local airline, United Airlines, and then there was a little flurry of activity right in the last 20, 25 minutes before the close in Federal Express. So they seem to be buying the beneficiaries, or what they assume will be the beneficiaries of lower energy costs. United was active all day, was active in weeklies, it was active in Jans, but a little flurry of activity in FedEx. And initially this morning when we saw the activity in United, we were looking for news, and then everybody said the news is kind of staring you in the face. It's the lower energy costs. So two names that we normally don't see a lot of here. So we were scratching our head today looking at the United Airlines activity because it was active all day and it was up all day, and we were all looking for some news. And I guess the lack of news taught us that it was energy, just cheaper energy. And you've got people now talking about $40 oil, and that would be an enormous economic boom for the airlines. The other thing that popped a little bit today was FedEx on the same news. But another name that's normally kind of runs hot and cold that got active today was Wynn, which got hammered. And that was active on the desk today as well.
All right, a lot of different ways to play the movements we're seeing out there in energy and oil. Certainly sounds like the OX clientele following suit and really exploring a lot of those different ways. Uncle Mike, I know you're not as much of an energy guy, but you do watch a lot of those names, and of course you also play a lot in the shinier commodities, particularly gold, both gold and Apple. Selling off a little bit today, not a heck of a lot really, but what, if anything, caught your eye in today's activity, sir?
Well, so for what caught my eye was probably maybe about an hour into the open. We were flat pretty much for the first hour, but I remember watching this throughout the morning, and then we had a little bit of a sell-off, pretty sharp sell-off right around 9:30 or so our time. But what caught my eye about it, I shouldn't say sharp, it was maybe about 7 or 8 points, but sharp considering the overall movement of the market today. But what caught my eye is that it stayed down there for probably maybe around an hour, and then we shot right back up to new highs, probably about maybe an hour and a half to 2 hours later. So with that, I think today would have been a fun day to be a day trader if you were actually watching the intraday movements. And like we say on this show a lot, just if you watch the open and the close and don't pay attention to the market during the day, you do miss a lot of really good parts of the movie. The other things that are catching my eyes, to kind of add to what Alex had said, with airline stocks going up, with looking at oil is down another about 1% today. I'm just looking at Chevron, for example. Chevron's down a little bit as well. So I think what's going to be interesting as we go through this, oil being the hot topic right now, is just to see not only how the airline stocks react, but just to kind of state the obvious, how the oil stocks react as we go through this. I remember in years past, if oil was down, then perhaps Chevron could rely on natural gas or something along those lines. But with oil doing what it's doing right now, if we continue to go down, it could be a slippery slope for the oil stocks, but we may be bottomed at oil, and we might have $75 oil in the next 2 weeks, and everything will be, to quote the Lego movie, everything will be awesome again for the oil stocks.
Hey, I just filled up in downtown Chicago last week on the week of Thanksgiving, so the height of driving around here and traveling. I think for the first time that I can remember in a long time, under $3 a gallon. Downtown Chicago. Crazy wow. Time. So the Saudi gift just keeps on giving, at least on the pump. And Mr. Sebastian, I know, speaking of Chicago, you are in the Worldwide Option Pit HQ today from scenic and lovely downtown Chicago, where it is indeed a brisk and balmy, about 35 degrees today. Not bad for this time of year. And in addition to the lovely weather, what else caught your eye in today's activity? I know a lot of your pit chatties, your pit mentees like to get involved. So, Mr. Sebastian, what did catch your eye today in today's activity, and what was going on out there in the land of the pit chat?
Well, it certainly was not the most exciting day. What caught my eye was, watching paint dry in many ways. What I did notice was, while the S&P was down 10 at one point, the VIX, as Mike said, the VIX just completely said, meh. And then actually, as the S&P was giving away its final couple of points, the VIX actually fell 0.2%. And at that point, I was like, oh, looks like we're going to go to unched. And then we did. And I continue to see on an intraday and really a day-to-day basis, VIX is a much better leader of the S&P than the other way around. And if you watch the two relative to each other, if you're just looking at VIX, it's not going to give you anything. On top of that, a couple interesting trades that went up, but really nothing overly special. That's really about it. It just was not an exciting day. I'm sorry.
Speaking of VIX, our friends over there at Business Week and a few other outlets starting to beat the drum for the fact that open interest, or shall we say lack thereof, out there in VIX land. This is the product that has done fairly well over the past years, you might imagine, listeners. Of course, we talked about it quite a bit here on the show, particularly earlier in the year, and again a month or so ago back in October when everything was moving, including the VIX. But despite those little blips overall, particularly right now, as we're talking about, not a lot of people really expecting a lot of movement towards the end of the year, and VIX OI has fallen off commensurately. It has been averaging for the better part of the last year over 8 million contracts. Right now it's at 5.7. It's over 30% drop off from that average. And it got really low back after expiration last month when it hit 4.3 million contracts open. That is the lowest since the beginning of 2012. So just kind of goes to show the market reinforcing what we've been saying here on the show. Not a lot of really expectation for some dramatic events to really drive vol and drive the market going forward. Mr. Sebastian, I'm assuming this comes as no surprise to you, the avid VIX watcher that you are.
Yeah, one thing to remember is part of the reason why the open interest is down is it's almost impossible to bet on downside now. And, a lot of people think that last move was one chance to hedge out. Until we see the VIX start to move again, you're not going to see open interest high. I think it's a story, but I think it really doesn't mean that much, to be honest.
Yeah, not a lot of really playing to be done on the downside because there are so few downside strikes available. Surprisingly, it's not really a story like we've seen of late when VIX starts to get down to this end of the range, the paucity, the scarcity of downside strikes makes it very, very call heavy. We're not actually seeing that. The open interest is only about 2.1 to 1 calls over puts. So it usually gets well into the 4-handle range when it gets down this low. So a bit of unanimity from a paper flow perspective and an open interest perspective, which is a little bit surprising given where we are right now. VIX cash hovering around 12.5 or so. All right, listeners, that's going to do it because there really wasn't a heck of a lot going on out there in the market today. So that's going to do it for the old trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we get into some of the funkier paper we're seeing out there from an overall options perspective. Going to kick things off here with a name that I believe is a newcomer to the old Odd Block. This is Opko Health, ticker symbol OPK. Closing today, pretty much unched $8.33. So not a premium name, but not as cheap as some of the $2 to $3 biotechs we like to talk about every now and then here on the old show as well. This is the name that does fairly respectable volume, 5,000 contracts and some change. That's pretty high for an odd block candidate, doing a whopping nearly 80,000 today, 79,088 to be precise. And what we saw, listeners, was pretty much a enormous roll. In particular, it was the Jan 2015, Jan 2016 10 call spread going up 35,000 times for 60 cents. It went up in two massive blocks. Looks like somebody pretty much taken a call right, a covered call he had put on earlier from the Jan 2015, so coming up expiration cycle, which is crazy to say that Jan 2015 is coming up, but indeed it is, and rolling it out a year to the Jan 2016 cycle. Looking at the open interest here, the Jan 15 10 strike having about 64,000 contracts open on it, so a fair amount of paper there, as well as about 37,000 open on this Jan 2016 strike as well. So it looks like this guy, if all is said and done, he may have some more paper to go. So we'll have to keep an eye on this one tomorrow to see if he's going to roll that full 60,000 contracts or perhaps do something else, maybe only do half of it. We'll see. But the open interest in the volume tomorrow will tell the other parts of that story. I guess he couldn't get all of it off. He only got it up in two blocks today, so maybe he had a hard time getting the rest of it done. Looks like it was also about 60 2,000 open on the Jan 2015 15 calls as well. I wonder if our friend is playing out there as well. Perhaps that's the other side of a vertical. Who knows? A lot of stuff lurking out here in this OI. Either way, looks like a fairly standard call right, wants to get some premium, doing it the way a lot of asset managers and advisors like to do, kind of the set it and forget it method. Find a level, find a strike that you're fairly happy with. Of course, $10 a year or so out from now, that's a decent level. I'm sure you'd be pretty happy getting rid of the stock there. And he's just writing it, putting it away in his books, and probably will do the exact same thing around December of 2015 as well. If all goes as planned, roll it yet again. Mr. Sebastian, is that your take as well on our friend here? Just a pretty much sizable but standard covered call roll here in Opko.
You're going to be seeing a lot of these in the next few weeks as people move their covered rights, their hedges, the whole 9 yards back a year. So I'd expect to see this type of trade be in the unusual activity for the next period of time. And while it's interesting, all it means is that the guy is still short vol and mildly bullish the underlying.
Of course. All right, moving on to our next name, our next victim here. And this is Avago Technologies Limited, ticker symbol AVGO. A little bit more pricey, a little bit more premium than our last name. This is closed at $103.07. Pretty decent day for them. Up nearly $8, a little over 8.4% on the day today. So a fairly aggressive day from an underlying perspective and from an options perspective as well. This is the name that does about 2,000 contracts a day, doing about 12,000 today, so roughly 6x their ADBE. And once again, to find out what was up, what was afoot, we have to look at the Jan expiration cycle. In particular, what we profiled here was the Jan 97.5 110 call spread going up. When we profiled it about 500 times, looks like some more may have gone up on the 110 strike, so it's possible this could have been a 1-by-2 ratio. Looks like customer coming in, buying to close the 97.5, so closing out a previous covered call position and then doubling down on the 110 strike to the tune of about 1,000, about 2x of those 110 calls going up. So this is kind of a little bit of a different story than the last guy we had. The last guy we had was kind of content to keep it and then just extend it on another year, and if it happens, it happens. Here's another guy seeing the stock running in his face and saying, you know what, I'm going to double down here. I still like writing calls on this name. I don't want to have my stock called away here just yet, so I'm going to roll it on up, and not just up, but 2x, because it's always fun. If you liked it at 1x, you got to love it at 2x. Isn't that the philosophy behind the 1-by-2, Mr. Sebastian?
That is the philosophy behind the 1-by-2. Yeah, lots of bullshit. It was a big, huge day for this company. So, really a nice move. I don't know why. Let me see. Was there earnings? Yeah, they had earnings. So nice move on earnings. And apparently the guy thinks it's going to keep going. And that's why you do that trade.
Yeah, he's thinking the best is not behind this name. A little bit more upside to go here.
It's much like you and me, Mark. The best is yet to come.
Indeed, sir. Indeed. All right, and with that invocation of a little bit earlier than Mr. Sebastian's usual period, a little bit beyond the 80s into the Sinatra era, but still a good tune nonetheless. The best yet to come. I'm not sure if that describes our last name here in the old odd block. You might say it's actually the opposite of that. This is Adobe, of course, ticker symbol ADBE. This one, ticker symbol, of course, ADBE. Let me set that over. This one, of course, closing today, $73 and some change down, pretty much unched on the day. They do have earnings coming up in about a week. And this is the name, as you might expect, actually does some paper to the tune of about 4,300 contracts, doing about 6,000 today, so a little bit more than average. But what caught our eye was a little bit longer term paper than some of the other stuff we were just highlighting. In fact, if you open up your own chains, playing the home game here, listeners, you'll see out in the April 2015 chain, there is a massive 5,000 lot lurking out there. We started off, and we profiled it this morning, 3,000 of the April 80s going up for for $2 here as the day gone on. Total of 5,000 has gone up on the strike, so 2,000 more piling in. That early chunk going up in one massive block. The other ones, I think, going up in a little bit more scattered size. This printed right near the offer, looks like with some stock going up as well. So it looks like if you look at the way the stock going up, of course, near the bid, so you would intuit from that, lifting the offer near it on the calls, selling the stock. So it looks like a pretty much a roughly delta neutral type trade. So it is a little bit of an interesting one. And as we said before, Adobe, the best is yet to come, is not a way I would describe this company. They're having a lot of problems getting a lot of their software to really be widely embraced and adopted, and there's been a lot of pushback on some of their systems over the years. So it is a bit of a question mark as to what is exactly afoot going forward for this company. This guy obviously betting on at least some vol lurking between now and April out here in Mr. Adobe. Mr. Sebastian, take us home on this size upside delta neutral call buy here in Adobe.
Well, anytime you see these ones that are delta neutral, it takes a little bit of the delta off, but it really still basically means the guy is bullish. It could either be a stock replacement where he's taking a little bit of his stock off, but doubling down on or really adding delta to the position. Or it could just be, he wants to get a better price, so, he flips some of it with the market makers. But either way, it's a bullish volatility play, and they've got earnings on the 11th. So unsurprised, the guy thinks the ball's going to keep going and that the underlying's going to keep going. So I like the play if, especially since the guy appears to be, Adobe's been on a run. So
yeah, in spite of all some of the dire developments out there, their stock hasn't done too poorly. I'm looking here at the vol levels. This isn't a bad level. It's not a screaming level, but it's not a terrible level either here.
No, and into earnings, it'll be pretty firm.
So there we have it, listeners. One to watch here. Got a little bit of time on this one, but we do have earnings coming up next week, so that could help this story play out perhaps a little bit faster. File that one in your to be watched category there, listeners. As we move on to our next segment, it's time for the Viceroy to don his fanciest of fancy hats. It is time for the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody. You know that tune, and you also know what this segment is all about. This is the portion of the show where the Viceroy himself, like I said, dons his fanciest of fancy caps and takes us behind the scenes, behind the velvet rope, past the burly bouncers into the inner sanctum known as Options Express by Charles Schwab. Mr. Viceroy, you touched on at the top of the show here that oil and energy and all of its myriad facets really occupying the mind share of the OX clientele today. Give us a little more insight into that, as well as what else was cooking over there in the land of OX.
Well, as I think we've all kind of pointed out today, the equity markets were fairly quiet with not a lot of activity going on. The oil theme has been dominant here. And actually, as soon as I said that, Mike Zaremski, who runs our futures desk, published his afternoon blog. And he's been talking a lot about energy, although today he was talking about the euro on the Draghi news and how it continues to be weak. But what that kind of did is it sparked me to spend a couple of minutes talking about some of the resources that are available up here at Options Express. And there's probably the two most frequently asked questions is, how do I get ideas and how do I learn more? So let me talk about three free tools we have up here at Options Express. Mike Zaremski writes, Mike runs our futures desk, writes a daily blog, and sometimes when there's activity, he writes it twice a day. He writes it pre-opening. In fact, he writes that one. I'll give you a peek behind the curtain. He writes that one from home before he commutes in, but he does a pre-opening now. Recognize many of the futures contracts do open early, but Mike writes a blog called Xpresso. Obviously, everything is branded with the X here at OX. And today he wrote it twice a day because there was activity going into the close, and he showcased ideas in the euro, a technical view of the euro, first and second support levels of the euro. That's the Xpresso blog. And then Nina and I and some of the Schwab folks create a blog called the Expound blog. And that comes out once a day. And some of the ideas you've heard us talk about in unusual activity are showcased in the Expound blog. Both of the blogs are free, but a third product that I kind of rarely talk about, and I got a call from the trading desk today, and they asked me to call a customer who just simply wanted to know how could they learn more. Was there an environment where they could practice trade? And another free product we have up here is the Options Express virtual trade platform. And the virtual trade platform gives you not the full power of the Options Express platform, but it gives you kind of the first 4 gears of the 6-gear transmission. And it lets you trade in a virtual environment. And you can trade stocks and options, but the products are all free. And the cool thing is if you're a newbie, or you're just starting out, or you've listened to the podcast, or you've come to a presentation, or you've studied options in a high school or college class, you can practice trade on the virtual trade platform. And again, you don't need an account. You don't need to fund an account to virtual trade. Just come to optionsexpress.com and click on the Educate tab, and you can open a virtual account, which is a cool way to learn and practice. So I thought I'd showcase 3 free tools: Expound, Xpresso, and virtual trade.
Good stuff. A lot of our listeners may remember we featured the Xpresso newsletter quite often on the Options Insider. We kind of retooled that a little bit, but maybe we'll bring that back one of these days. It was pretty popular. And you can, of course, find a lot of the archives on our site. Of course, find all the new ones over there at optionsexpress.com and sign up for all those other cool tools that they have while you're there. And while you're kicking the tires over there, let them know, hey, I heard about you guys from the Option Block. They love to hear about it. We love to hear about it. It's always a good time for everyone involved. Thank you for that, Mr. Viceroy. And now we're going to keep on rolling because it's Thursday. It's time to crack open the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, as the man said, this is the portion of the show where you guys get your chance to join us here on the old All-Star panel. Make your questions, comments, thoughts, deepest insights, slanders, slurs, all of those known to us here on the old All-Star panel. No shortage of ways for you guys to do just that, including surf on over to the mothership, the website, theoptionsinsider.com. Post a question or a comment there via our comment system or use our website feedback form, and we'll, of course, find them and route them over to the program. Hit us up via email, questions@theoptionsinsider.com. Just be sure to put question for the option block somewhere in there so we know where to route your question. Or, of course, via the old socials, Facebook.com/theoptionsinsider, Twitter.com/options, and you can hit us up there as well. I always forget Stock Twits. I believe we are Options Insider or The Options Insider, one of those two on Stock Twit. Shows you how often I go on it, but I'm trying to go on there more, and a lot of you guys like to use Stock Twits too, so you can find us there. A lot of ways for you guys to hit us up, including a lot of you actually like to use the mobile app. It's all baked in there as well, with the exception of Stock Twits. Maybe we can get that fixed. All right, first off, here's a question. I know Uncle Mike is excited about this one. This one's been waiting for a while, but it's an interesting kind of a thought question we get variations on every now and then. This one comes in from Anthony Fields. He writes, I was just reading through a book, I won't name them here to give them a free plug, that blamed the crash in 2008 on derivatives. What's your take on stuff like that? Does it drive you crazy, or is there some truth? Great question, Mr. Fields. Like I said, we get variations on this theme quite a bit. Derivatives, if you haven't paid attention to the financial media or any of the media for the past couple of decades, don't exactly get a lot of love in the mainstream press. There's a reason we don't call it the derivatives insider or the derivative block, in addition to the fact that it wouldn't really work with the pun there in the title. But it does kind of drive you crazy if you've been in the business for any length of time, because it is such histrionic and such hysterical things that are kind of thrown around whenever they use the term derivatives. It has become very much a pejorative terms. But there is a kernel of truth to what that person is talking about, just not in any of the products we talk about here on a regular basis on this show. Everything we talk about here and most of the programs on this network are what are called listed derivatives. They're traded on an exchange. They're cleared by a central clearinghouse, a central counterparty there. So there's no counterparty risk. They're not hard to value and do price discovery like you have with a lot of the OTC stuff. And the OTC stuff, that is where a lot of those problems originate that he's probably talking about. Things like the credit default swaps that AIG was blasting out to high heaven and things like that had no regulatory oversight, no central clearing, very limited price discovery, a lot of counterparty risk, as we saw, huge counterparty risk. So in the strictest sense of the word, the swap is a derivative, even though it's a very, very basic derivative. So he is right. But in the end of the day, really, what we talk about here, all the listed stuff, all the options that go up on exchanges and everything else, there were no problems there whatsoever. So in that sense, he is very, very wrong. And Uncle Mike, I know this is a pet peeve for you, so why don't you go ahead and I'll let you have pride of place chiming in here for our friend, Mr. Fields.
Okay. Well, first off, Mark, I think it's good that you established the difference between the credit default swap derivatives and the derivative options with which we talk about on this show. I think that's a very important point to make. One thing that I want to add to that, or a couple things maybe, is that let's look at the things with which AIG did. And it wasn't the derivatives in and of themselves that caused all the bad things to happen. It was the people pulling the trigger on the derivatives. So with that, it kind of comes down to what a lot of things have to say, is that it's the person dealing with the issue, not the issue itself. So the credit default swaps themselves, yes, there was counterparty risk, but with that, AIG knew of all that before getting into it. And if they didn't, then it's something they shouldn't have messed with in the first place. So I want to just emphasize on this. It's one of those things that it's the person, it's not the derivative that's causing the problem. So with that being said, let's say that if you've ever read the book When Genius Failed, it's a great book. And so in a very complex manner, what long-term capital management was doing was selling far out of the money calls and puts very leveraged. And it was kind of one of those things where, yes, they were levered 10 trillion to 1 or some insane number, but the odds of the event actually happening of what they were doing derivatives on is so slim that they were fine taking on that leverage. And it did well for several years. But after a while, the once-in-a-lifetime event that seems to happen several times in a lifetime seems to then happened, and it was a pretty nasty ending. That could have been a lot nastier. So with that involved, it's the person's poor risk management that causes these things, not the derivatives themselves. What's your plan should something go against you? If you're levered 10 trillion to 1 or whatever numbers they are out there, then you need to have a plan in case it goes against you, not just say, oh, well, the odds of it are just so astronomical of that happening that we're not even going to, it won't happen. And I've seen people on the retail side of it take on that opinion more than I care to even comment on. And that's what often leads to retail traders blowing out their accounts. So in things like the crash of 2008, it's a very similar mentality, is that, oh, everything's fine. This is easy money. Why would we stop doing this? I'll leave you with one of my favorite comments that I always say on this show. I've said at least 100 times on this show, I'm convinced. One trader was talking to another trader saying, wow, I was really good at selling puts. I've been doing it for 30 years. And then 2008 came, and then I lost a lot of money selling puts. But who could have possibly predicted 2008? The other trader says to him, the person who was buying those puts.
A famous anecdote, I believe you have said it about 100 times on the show, but the 101st still has its punch, sir. Mr. Sebastian, anything you'd like to add here for our friend?
Well, I mean, the other whole piece is that, this was all started by the ridiculous mark-to-market. And market-to-market, for one thing, on like an exchange-traded product is one thing, but the system for marking bonds to market is the dumbest. Over-the-counter bonds. It's one of the dumbest systems in the planet. And that was a major problem associated with the market, was that, a lot of these bonds that were being, held, that at their absolute worst, people are like, oh, there was so much bad debt, blah, blah, blah. No matter how bad these collateralized mortgage obligation bonds were, even the worst tranche was worth 50 cents or 40 cents on the dollar, and they're marking them a penny on the dollar or a nickel on the dollar, and it just wipes out the capital. And that was really what really created a huge portion of the kind of really allowed the crisis to exacerbate. When you count on the market participants that are holding the assets to mark the actual system where they would buy something, it doesn't make sense. It's nonsensical. It's not like a stock market where, they don't where one of the interesting things is in the over-the-counter process, for a bond to move, it doesn't have to trade. And whereas in the stock market, if a stock, doesn't trade all day, it marks at the closing price of the previous day. All right? That is how these things trade. And that was a major problem with 2008, was that the ridiculous marking-to-market system in the over-the-counter bond business was just should have been thrown out, and it was eventually thrown out.
Yeah, that is a big problem with those products, because price discovery is an issue with those things, because they are kind of opaque, and you're right, they don't trade that often. And they made a half-hearted attempt. They realized they needed to address that issue, but you're right, the mark-to-market system they incorporated, it was dubious probably at best. And of course, there's always flaws whenever you have market participants trying to mark their own things, because from experience, I know I did this myself. At the end of the day, if you're long a lot of premium, you're going to keep those marks a little bit higher than maybe if you're short a ton of premium. So there's a lot of that kind of stuff floating around there as well. But you're right, that is a good point that isn't brought up a lot in a lot of these tomes and these screeds that just condemn all derivatives. They don't really get into the mechanics that much, things like mark to market. Now, Mr. Alex, you've been around pretty much longer than all of us combined here in the business. I'm sure you have a lot to say. You've encountered this topic perhaps once or twice in your day. What do you have to say here for our friend, Mr. Fields?
So I'm going to start by telling you I just took my blood pressure medication and sucked on my inhaler, because this is the one question that lights me up more than anything. I sat through the 87 crash. I sat through the 73 crash. I sat through the 89 crash, 2008. I've been in the industry a long time, and every time we have an event, we do a postmortem afterwards, and we all look at each other and go, God, that was stupid. Why didn't we see it before? The problem isn't derivatives in and of itself. The problem is, and this used to be a joke on the trading floor, it's people who are motivated by trying to make an enormous amount of money, and they don't own the risk. So, the joke on the trading floor used to be, if I lose $100,000, I'm in trouble. I've had a bad day. If I lose $10 million, somebody else had a bad day. That's my clearing firm's problem. And it's aligning the interests. AIG was a client. I did a fair amount of education over there. And I can tell you that there was clearly no alignment in interests. The people got paid on the wrong variable. And the events of 2008, the 87 crash, the 89 crash, clearly had a strong derivatives thread in them, and there were problems that needed to be fixed relating to cross-margining and dynamic hedging. The 73 crash was the oil shock, and markets get catalysts. What happened in 2008 is the problem began in the securities markets and then spread to the economy. The only other time that happened was the 29 crash, where the markets took the economy lower, and it was the lack of alignment. I mean, if you lost a lot of money, you didn't pay for it. And people still haven't paid for it out of the 2008 crash debacle, whatever you want to call it. If Elizabeth Warren listens to the podcast, she's probably very excited. But the problem wasn't derivatives. The problem was the non-alignment of interests. And then derivatives just give you the leverage to make that problem bigger. So, yeah, I think we've said it all.
All right, sir. Very, very measured response for you, given that I'm sure you've encountered this once or twice in your day, as we all have. When you sign on in this business, it seems like you pretty much become, you get the role of defender of derivatives, whether you like it or not. Maybe we need a superhero outfit with a D on it. I'm not sure if that would be a very welcome superhero or not, but interesting nonetheless. Good question there, Mr. Fields. We'll move on to another one here this one comes from Milano Fan. I'm not sure if he's talking about the city or those delicious cookies, or I believe maybe a soccer team out there as well. So maybe all of the above. Who knows? But he or she writes, hello to all members of the All-Star panel, included but not limited to Uncle Mike, the Viceroy, the Rock Lobster, the Greasy Meatball, and the mighty host himself. I guess I'm mighty. I like that. I am working my way through the back catalog of episodes. I'm somewhere around episode 250. I have a lengthy commute and probably a few flights a week, so I should burn through the rest in a couple of months. I've heard a number of panelists mention a strategy called a broken wing butterfly on multiple episodes. I'm a little confused about this. What exactly is it? Is there a standard construction for this type of strategy, or is it more of a number of similar strategies being lumped under the broken wing umbrella? Hope you guys can answer this. It would be hilarious to hear my letter read on the mail block. Well, there you go, Mr. Fields, or Mr. Milano Fan, excuse me. And he writes, last, I'm planning a trip to Chicago early next year. Which pizza place should I hit? I know you guys treat pizza like religion in Chicago. Happy trading. Well, excellent questions there, Mr. or Mrs. Milano Fan. I'll start with the last one first, the delicious part first. I'm going to give you a little bit of a heretical answer for the pizza. I'm not a huge deep dish fan. I come from back east. I like my pizza a little bit thinner, actually. So I like a place out there in Bucktown called Peace. They have New Haven style pizza, which is kind of the pizza I grew up on in Connecticut. And so I like that. A bit of heresy out here in Chicago, I know. But again, if you're not a deep dish fan, there are alternatives. I want you to know that. All right, now we'll go back around the horn the opposite way. I think we'll start with Alex first this time. So, Alex, you get to weigh in on the broken wing butterfly as well as a tasty pizza recommendation. The floor is yours, sir.
Pizza recommendation, unos or dues if you're going to be downtown. Malnati's with the butter crust. This is coming from someone who just spent 6 weeks off the show after weight loss surgery.
Yeah, I know it might be a painful question for you, but you also have some insight into this issue.
Yeah, deep dish pizza is my expertise. Broken wing butterfly, simple answer is a butterfly is a balanced 1 by 2 by 1. A broken wing butterfly is you unbalance one of the sides. So a normal butterfly might be the 90, 100, 110. Broken wing is digressing from the 90 or the 110. And that's what makes it a broken wing. Not a strategy I'm particularly fond of, but broken wing because the payoff has one side, looks like the wing is broken, it's unbalanced.
Yeah, I've never been a huge broken wing guy either. Not really my strategy du jour. I know, Sebastian, you like talking about it every now and then, so give us your take on the old broken wing as well as your tasty pizza recommendation, sir.
Yeah, well, it's my favorite trade. It's about as close to a standard front spread. Basically, there are two ways of doing it. We can do it where we do it for a debit, and we can do it where we do it for a credit. Typically, the way I like to trade them is as a credit, which is really a lot more like a front spread or a call or put 1 by 2. And the idea is that, if I do a directional broken wing fly for a credit, if I'm wrong, I'll win. If I'm right, if the underlying just sits, I'll win. If the underlying makes a non-volatile move in the direction I expect, I win. The only way that I really get beaten in that is when the underlying makes a violent move in the direction I'm expecting. So in which case then the better trade would be the broken wing butterfly for a debit. So I use the broken wing butterfly for a credit in lieu of a front spread. I use the Broken Wing Butterfly for a debit in lieu of the standard call spread. It lowers the cost, call spread or put spread, because generally it will lower the cost. It's a less expensive way of kind of maybe sometimes trading skew or certainly trading order flow. So one of the things that you'll see with a lot of this odd block stuff, especially single options, is that if a customer really has an axe to grind on a out of the money put, let's say in pick a stock, UPS, customer buys a load of the 105 puts. Well, there are ways where I can sell that 105 put twice and then buy some strikes around it to basically agree with the customer, sell the overpriced option, and then buy some cheaper stuff around it. And that is the reason why I'd use the debited one. Now, in terms of pizza, I am much more of local flair than the rest of my associates, having been from the area and having lived downtown for about 12 years before just recently moved to the suburbs. And I will tell you the best deep dish, without a doubt, is D'Agostino's, which is mostly on the north side, although there's a couple out in the suburbs. In terms of kind of some of the more chainy restaurants, I think Gino's has Due or Giordano's beat. So those would be my or Malnati's for that matter. Those would be my recommendations in terms of pizza.
Well, I knew you liked the Broken Wing. I can't say I'm familiar with the D'Agostino's pick, though. I'll have to check that out one of these days. It's a yummy, yummy, yummy.
and
you're right about the Broken Wings. I don't use them that a lot, but I tend to use more of the verticals. But it is analogous to those types of trades and the ratios that we talk about a lot. Using those types of trades to take advantage of the unusual activity we're always seeing, instead of being the lemming that just piles in and buys the 10,000 and first put on that strike. And you know how that usually works out. All right, and last but not least, Uncle Mike, your take on the Broken Wing Fly, as well as a tasty pizza recommendation for our friend, Mr. or Mrs. Milano Fan.
All right. So in terms of pizza, I live about an hour outside the city, so I don't know if I'm going to be your best pizza recommendation person. But if for some reason you're out in the hinterlands of St. Charles, send me an email, give me a call, and I'll be more than happy to take you to the best pizza out here in the mountainous region of St. Charles with which I live. All right, so the way I like to look at Broken Wing Butterflies is that step one, I'm bullish on a stock, so I buy a call. Wait a minute, that call's too expensive. It's too much volatility in it. All right, I'm going to buy a call spread instead. I'll limit some of my upside, but it's not going to cost as much. Well, you know what? That call spread still costs a little bit too much, so I'm going to create a butterfly. Well, looking at that butterfly, I like the idea of it, but the butterfly costs a little bit too much, so I'm actually going to set it up to where I'm either paying a slight debit for the butterfly, like Mark just described, or I'm possibly even getting a credit for this butterfly. And the way with which you can do that is widening one of the legs of the butterfly. So, for example, XYZ stocks at 100, you could buy the 100 call, sell 2 105 calls, and then buy 2 115 calls. And by doing that, what's going to happen is you're still going to have bullish exposure, but the problem is that you can be too right. And that's the way with which you need to monitor it, to where once it goes above the body of the butterfly, in this case 105, you need to be prepared to make an adjustment. And a lot of times, if you're trading these frequently enough, you're going to need to make the adjustment much sooner than that. I typically don't use broken wing butterflies, but I'm not against them. They typically just don't match up with what I try to do, with me being the hopeless bull that I am, knowing that the market's going to double tomorrow like I always think it's going to happen. But I think it's a great trade. I think it makes sense, but you need to monitor it very closely and have a good understanding of what you're doing. And I just happen to know a guy who teaches on how to do that.
So just for the record, Uncle Mike religiously opposed to the butterflies and broken wing butterflies. Is that what you said?
Something like that.
I love them.
There we go. A good diversity of opinion here on the old program. Unfortunately, it's all the time we have for the mail blocks. Also all the time we have for this episode of the Option Block. Listeners, we ran a little long, but I like to make sure you guys get your time here on the old program. You go to all the effort of sending in questions. You want to make sure you get, and there were good questions too, particularly the pizza debate, opening up some old wounds there, which is always good stuff. But before we go, as always, let me check in with each of our cohorts here on the old All-Star panel, see what they have cooking that may interest you. We'll go backwards yet again. We'll start with Tusaw again this time and go around the horn. Uncle Mike, what's coming up in the land of RCM?
December 10th. We're getting down to the wire here with our event in Miami. Sign up as soon as you can, rcmfutures.com.
And Mr. Sebastian, what's coming down the... One more time, blah. And Mr. Sebastian, what's coming down the horn in the land, the pit?
We got our boot camps starting on Tuesday. Andrew's going to be in town all next week as well. Use code INSIDER, take 20% off for Options Insiders Radio. Go to opspit.com/bootcamp to register.
All right, and if you can't get enough boot camp listeners, also check out our show, Options Boot Camp, which is a fun dive into that, all that fun stuff as well.
Stolen from me.
I don't think so. I think you owe me a check or two on that one, but we'll debate that later. Anyway, all right, and last but certainly not least, Mr. Viceroy, a man who hasn't stolen anything from me, at least that I'm aware of. What is coming down the pike over there in the land of Options Express by Charles Schwab?
The next live event, Saturday, December 13th, live. Jimmy and the crew will be in Boca Raton, Florida, doing their 3/4 of a day event. The event is free. It is simulcast on the site. I'll just touch on a couple webinar dates. December 10th, the Wednesday, a very full calendar of webinar events. Nina's going to do the trading platform and site tour as a webinar. Then she's going to do order entry and walk limit as a separate webinar. Then she's doing a third webinar that day. Nina's the hardest working person in the options industry, protective puts from the perspective of what you can do in an IRA account. And then I'm going to do an idea hub. I haven't done those in a while, but those 4 webinars on the December 10th, Wednesday. On the Thursday, Nina's going to do part 2 of a webinar series we've just begun here at Options Express. We're going to showcase how to use the Schwab equity research tools, what's called SER, Schwab Equity Research. And again, I'm going to put a personal spin on this. The B and C grade stocks, if you're an income-oriented investor, look at covered writing against the B and C rated stocks. The A-rated stocks, in the last 2 years now, we've had extraordinary markets in the last 2 years, have performed better than I would position a covered right stock. But then again, maybe you just want to buy the A-rated stocks or buy the A-rated stock, and if you get a run in it, manage it or create an exit point with the covered right. But Nina's going to do part 2 of that. She's doing part 1 right now on Thursday, December 11th.
All right, good stuff. Thank you for that, Mr. Viceroy. And on behalf of the Viceroy and the Greasy Meatball and Uncle Mike, and of course myself, I guess I'm the mighty host for today, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to the show, for sending in such great questions. Keep them coming. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.